Charles Harris here, the life insurance guy, and today we're going to be talking about convertible term policies and what is a convertible term policy, how it functions, and how you use it. Now, normal term policy actually expires, and at the end of the expiration date, your coverage is over and you don't get any money back that you put into it. What a convertible policy allows you to do is at some point within that term policy, you're actually able to convert it from a term policy to a permanent policy. Now, every company is different and there are different products, but some companies, some products may allow you to convert that term into a perm at any point within the term. Some products may only allow you to do it, let's say, between years 5 and 26. So it just depends. Every company is different. Some companies give you back a return of premium, which is a portion back of the premiums that you actually have paid into the term policy to fund the permanent policy. One of the greatest things about this is you don't need a new health rating, and that is huge. So once you actually have a term policy and you go to convert it into a permanent policy, you don't need to get a new health test. So if you're 25 years old, and let's say, for example, 15 years later, you go to convert this policy at age 40 years old, well, a 40-year-old is going to have a much different health rating than a 25-year-old. So you would have to you would still be classified as a 40-year-old person, but your actual health rating wouldn't change. So for example, if you were rated as a preferred, you couldn't go to standard or anything else below preferred like that. So your rating actually stays the same. Obviously your age would change, and that would change, but your rating wouldn't, and that is very, very big. And then once you have these policies, once you have a permanent policy pretty much functions the same as a term policy, except now you have a cash value component to it. Now you have money that is growing tax-free. But here's a big thing though. Your plan has to be structured properly. It has to be structured properly. And if you are able to structure these plans properly, your money grows tax-free. It grows on an index strategy, which is contractually guaranteed to never lose money. So there are a lot of benefits to it. But that's why it's so important that these plans are done right by someone who knows what they're doing. So that's what a convertible term policy is. Stay tuned. Next time I'm going to be talking about a ROP, which is return on premium, and then living benefits, which is the actual added benefit to a policy that allows you to access a portion or up to all of your death benefit while you're living. So until then, peace and blessings.